I'm not saying this. The Economic Times says that the land prices in Bangalore has increased over 90% in the last 5 years comparatively. Like other cities are doing great, followed by Hyderabad 89%, Bangalore again 80%, NCR at 79%, Bangalore again. So all these major cities are doing great when it comes to land prices, right? So with that, ladies and gentlemen, welcome back to Fin Talk with Anil. We are on our day 22 of 30 days, 30 financial topics, and today we are going to discuss about real estate and how you can invest in real estate with less money. So let's get started with our day. So, according to the news reports, as I said, 200% increase in this Bangalore areas, right? If you want to check out at Delhi, then the Delhi NCR has about 80% return in the last 5 years, 78 and etc. Yeah, so Bangalore is kinda leading right now after the COVID or before. This is a kind of a much attractive form of investment lately, and everybody wants to have a piece of it, right? But then imagine with the skyrocketing prices of the lands everywhere, it is not very easy for you to continue investing with your little capital. So today we are going to majorly discover about those investments which are into real estate market, but will not eat your all money, or you wouldn't be needing a lot of money to invest in a real estate market. So let's get diving in. So why a real estate market? So like I said, there is a steady potential income, no risk. Has India always grown steadily when it comes to real estate? There is no sudden spikes or sudden cut downs, except for when the GST was introduced. There we did a little cut down, but then soon the world or the Indians have picked that up, right? So it kind of gives you a steady income potential, and over the when you see the rental income also, it kind of gives you a security, right? So high returns in a growing market, as I said, you can earn a month-on-month income as well, but then you can also capture that advantage of a growing market that nobody wants to miss out on that. Yeah, so that is there, and diversification of investment. Yeah, so uh, for the last 22 days or 21 days, including today, we have been discussing a hell lot of investment opportunities, and then some, involves crypto, some involve term insurance, some involves mutual funds, etc. But then if you're someone who's looking for more diversified way, yeah, then you can add this real estate concept into your portfolio and take a better advantage of it for a steady income, right? So that being said, moving on, the first and foremost way of investing into a real estate with a small funds is called a house hacking, guys. It is typically a buying a house property or the land adjoined to it, or taking it on a lease if you were to. So let us understand this way. This involves buying a large unit of a property and carrying out different activities to supplement your income, right? So, for example, you could stay in one section of the house and rent out the other part to the probable tenants. For example, a 30-year fixed mortgage at 6% for a house priced at about, let us say, I'm just giving you an example. Let's change that to a 30 lakh rupees before, and 26,000 rupees a month. Let us consider that on no fact check. per month considering various taxes and other interest payments. So in this particular case, you could find two tenants who are willing to pay a 15,000 each every month, right? Then you will end up having to recover about 30,000 rupees a month, which kind of covers your lease in addition to you staying free of cost in that house. Yeah, so house hacking is something where you take the advantage by taking on lease, provided you read those terms and contracts carefully, that are you allowed to invest or are you allowed to give it on a sub rent or a sub lease, right? So there are some online platforms such as Airbnb can effectively use to find tenants and temporary guests who are going to pay for it. So investors could also build some form of accessory unit in the land available or any additional space available in the property, right? So for example, one could construct a basement or rent it out for any commercial activity in any commercial activity, or yeah, so in the very least offer some storage space within the property. It could even be advisable to read the local laws before you do that, right? So that being said, let's move on to our second most popular form of investing into real estate with small bucks. So the REITs, which stands for Real Estate Investment Trust, can be compared to mutual funds, you can say, but amounts as low as 500 to 1,000 can be invested in this kind of schemes. Companies operating in REITs invest this collective amount in both residential and commercial properties, which offer high returns on investments. Many REITs offer as much as 90% of their taxable income in the form of dividends to its shareholders every year. So you know that the return is going to be good, right? So they also offer quarterly payouts or payments. So this even be considered as a stable income, right? So that is something if you want to check out. If you want to discuss further about REITs as a company or a trust or association that invests directly in a real estate through properties or mortgages, right? So REITs trade on stock exchanges as well and are bought and sold like a typical stock. So you can go out and do it with your trading account on the market, right? So the Internal Revenue Service requires them uh, to pay out most of their taxable profits. Let us say if you have gained a 1 lakh taxable profit, then you are supposed to pay 90% or even more, that is 90,000 or more, to the shareholders via dividend annually. So they can't keep their money with them as a retention, right? So okay, however, the REIT companies do not pay corporate income tax. That is something, it's a bigger concept we might see later, but at least 75% of REIT assets must be in real estate. Yeah, so at least a 75% of its gross income must be dividend from rent or mortgage or interest or gains from the sale of the property. So you understand that the main business of this REIT. So, to summarize, the REIT is similar to mutual funds, which can be invested with a lesser money and which can, also earn you a steady dividend as long as good as the rental income if you buy a house property. Yeah, so that is something. So let's move on. There is something called crowdfunding platforms, which are not very popular in India, but then to understand the concept, well, generally many platforms require investors who possess at least a 10 lakhs and an annual income of 20 lakhs or more, right? There are some crowdfunding platforms which do permit the investors with a lower amount to invest in this platform. So this is, as it says, it's a platform and you can go out there. These people are typically like REITs where they pool the fund and access high value properties with minimal investment. So it kind of gives you an advantage to enter into the commercial market with lesser money. And this is happening. This could be accessed with the online platform, makes it very easy for people to participate, no physical uh, limitations. Yeah, so that being said, let us understand a fractional ownership. Lately, we have been hearing a lot about this. It's a kind of an interesting concept. This is getting popular in the form of cars, basically. So, if you ever imagined if you wanted to have a or own let us say Ferrari or Porsche, right? So obviously this is not a dream for a commoner, right? But then if you're someone willing, your strong will is to buy a Porsche, then yeah, you can. A typical Porsche in India, let us say, costs about 1 crore. Then let us say 20 people gather around and pick up 5 lakhs each. So 20 people gather around an amount and invest it, right? So invest in buying the Porsche, right? So when you do that, you being a partial owner of it, you are allowed to use basing on the terms and conditions of the uh, group, how many days you can keep it and how many other days you can keep it. Let us be honest, not everybody wants to drive every day, right? There are the cars are in Bangalore it's kind of considered immovable assets because it doesn't move that much, right? So that's on a lighter note, but then the same concept is applied in the real estate as well. So the concept of fractional ownership has gaining popularity, which involves small investors in real estate. Investors contribute funds to collectively purchase properties through various fractional ownership platforms, or you can build this on your own with your own gang, right? This approach proves cost effective, of course, which providing the benefit of high-end property ownership without a substantial investment. Yeah, so fractional ownership also yields significant return on a modest investment. So you kind of get that advantage of real estate gains. Like unlike a traditional property ownership, which involves extensive paperwork, fractional ownership simplifies the process because there is somebody else taking care of all this stuff. Yeah. So there comes another form of a popular investment in or investment into real estate without investing into real estate. Let's call it. So that is called a real estate mutual fund. So we have been hearing a lot about mutual funds, and they are just doing great, right? We would even see in our upcoming videos whether the real estate was a better idea or a mutual funds was a is a better idea, right? So that comparison, stay tuned, and I'm going to add a link about where I have explained the mutual funds, etc. So do check that out. So these are typical mutual funds, of course, but then the major focus of the investment, like previously we have discussed on mutual funds to give you an insight, then the mutual funds kind of diversify your investment into different kinds of sectors. There are mutual funds who are particularly interested or invest your funds, major funds into banking sector, or some are invested into large cap, some are into small cap. I will add the link, so check that out. So similarly, these funds are typically invest your funds into those real estate related so let us call it real estate related stocks, which we have uh, discussed already, which is called REITs, right? So this like we said, REITs trade in the market as a share, but which particular REIT are you want to gain, right? If you have a 1 lakh or a 10 lakh rupees, which particular REIT do you want to invest in? These are like the companies. This can also have a diversity or market object or impact, right? So if you don't want to if you have two things in mind, if you want to take the advantage of the real estate, but you also don't want to take the market fluctuation so much as a risk, then mutual funds, yeah, the where a guy can actually invest your money and manage it, right? So this that is majorly out of it. So pool investments like a mutual fund and diversify across residential and commercial properties, which is like the REITs. Let us say 10 different REITs they are investing and professionally managed, right? Like I said, you don't have to find out who's going to manage your funds, right? So that being said, some key consideration when kind of evaluate your market risk and certain factors require some consideration. Yeah, so when purchasing some residential property or evaluating amenities or neighborhood for commercial properties example, examine the tax exempt area or something. So proximity of warehouses or roads accessibility or project the area's development during the investment period, etc. So emphasize investments that ensure strong cash flow and anticipated returns. Yeah, so that has been said, investing in real estate investment trusts can be a great way to enter the real estate market without the need of own investment. Yeah, so real estate investment is accessible to everyone using these methods we have discussed. You can start with small investments and build wealth over time, and innovative methods like REIT or house hacking make it way easier. Yeah, that is all for today. Thank you very much. Tomorrow we will come up with a new concept where we will see how the mutual funds are performing compared to the real estate. Yeah, so stay tuned. Thank you for watching till the end. See you all tomorrow. Bye bye.